Welcome. This is Gideon's Club, and today is January 19th on Friday of 2024. All right, so let's get into talking about all things crypto today and what's going on in the market, my friends. And the headlines read right here. Crypto bulls lose 217 million amid concerns of Grayscale's outflows. Okay, but as you get into reading this, basically, this announcement, this crypto news, people are panic selling, if you will, Bitcoin, and the bull market hasn't even started. I don't know what to say to this. I mean, it's obvious that people are being tricked into selling, and what kind of news did they put out here? Grayscale selling? No, it doesn't say that. As a matter of fact, if you read on, it says right here, Grayscale has moved its Bitcoin, $400 million worth of Bitcoin, to the Coinbase custodian prime program. And what did they do? They moved it to Coinbase. And what did people say? Oh my God, the market dropped. No, they moved their Bitcoin. Who knows where? Maybe they moved it to the Vault and Coinbase. And oh, maybe they're going to sell. Maybe they're not going to sell. But what does this do? What is the announcements in crypto? They're telling everybody, hey, Grayscale is selling. No, Grayscale is not selling, guys. Grayscale simply moved their Bitcoin to Coinbase. Could they sell? Yeah, anybody could sell. I have my crypto in Coinbase. I could sell. But the point here is that people show this stuff in order to freak them out. Where's Bitcoin today? It's still at 41, guys. It's still at 41. We look at the charts here on the weekly. It's supposed to pull back. So it's not even a question whether it should or shouldn't pull back. Should you be panic selling right now? I wouldn't. The crypto bull market starting in April. The bull run, it hasn't even started yet. Yes, it can pull back. What are we saying here? Maybe to 35, but I mean the way everything's going with the new Bitcoin ETF, the new amount of people it's going to generate, I wouldn't be surprised if this doesn't happen at all. So don't buy the hype, guys. Bitcoin is not falling. Bitcoin, it's not the end of the world, and it was moved. Okay, it was moved. But this gets people into panic selling, and then we go in here and we say, wow, who are the people that are selling? Obviously, the people that are scared, they're selling their Bitcoin right now. So we're looking at Bitcoin, and Bitcoin has dropped. It's gone down to 41.5. Ooh, big deal. I mean, technically, it should have gone back to 30, and if it goes back to 35, hoorah. It's not a lot, guys, because once this crypto bull market starts, it's going to go up. It's going to go through the moon. We're going to see things going on. Little disclosure here. Once again, you buy and sell the crypto you want to buy and sell. We're just talking about crypto news, what's going on daily, and we're letting you know. Don't buy the hype. Don't panic sell. Why? Because the crypto bull market hasn't even started. For all you new people out there, it hasn't even begun. Okay. So we get over here to Illuvium. And what happened to Illuvium today on the daily? Oh my God, this thing just went down to like 78, and I'm the one invested in Illuvium. It dropped down to 78. What did I do? I'll tell you what I did. I bought some more Illuvium. Okay, and people are like, "Oh, whoa, it's going down. Illuvium's going down. Look where it's at on the daily. It's the end of the world." It's not the end of the world. The fact is the crypto bull market hasn't even started. So none of these coins should be pumping to the moon until Bitcoin starts pumping to the moon. That's the reality of trading crypto. For most of us that understand that. So right here we see that it dropped to 78. Immediately I bought more. I bought more Illuvium, and it went back up. It's already squeezed back up to 81. Can it go back to 73? Yeah, why not? But I mean, here's the 200 EMA. It can average out. Once it hits this area of support, it's going to stay there, guys. Look at the RSI. The RSI is going down on the daily. It's only going to go up. My prediction, obviously, in the future, Hey, I think it's going to go to 160. You know, I'm hoping it goes to 160. When it goes to 160, I don't know. But considering that the bull market hasn't even begun, I think we're just beginning to see this play out right now. So let's go ahead and talk about um, dollar cost averaging. For all you new people out there that are trading, when you see Grayscale and you see the news, oh my God, Bitcoin is being sold. This is to put fear in you so that you sell your coins and someone else buys them. Okay, you get left out the trade. Okay, no one should be selling right now. Everybody should be prepping and getting ready. That's the reality of things. So let's go ahead and review right now what I did, which is dollar cost averaging. Okay, dollar cost averaging is a wise way for you to trade. When we're trading and we don't want to risk a lot of money, what do, guys? We simply invest. We invest in certain coins. We invest in certain stocks. We buy on a weekly basis or on a monthly basis. Okay, and whether it goes up or down, we're in it for the long run. So we're looking for a long-term investment. We're looking for a swing trade. We're looking for good returns. Okay, and so here we are. We're looking at basically buy when it's going down, buy when it's going up. This is dollar cost averaging. You're buying in intervals or you're buying in increments. Okay, so just to give you a little heads up, we're talking about why did I buy when Illuvium kept dropping, and as you saw, it squeezed up pretty quick. You know, because I already know it's at the bottom of the RSI. I already know that, hey, eventually it's going to scale back up. It's not even a concern. The value of that coin is really good for me in particular. And once again, disclaimer: I'm not telling you what to buy, what crypto coins to buy, what coins that you want to buy. All of them are good. They're all good right now. Bitcoin definitely good. Ethereum's good. But you make your own decisions. You buy however much you want, and you decide what you're going to invest in. So when we have this discussion, what is dollar cost averaging? We are buying whether the market's going up or down. We're buying at certain intervals, okay? So we're going to go ahead and go to the next page right here. And this is just an example. So what would I do? I would buy my stock, maybe one lump sum here for a certain amount. This isn't ideal. Maybe I'm buying to start off. How much do you want to start off with investing? And then basically you don't want to put a lot of risk in general in whatever your dollar cost averaging. So now you decide how much money you want to invest on a monthly basis or on a weekly basis. You're adding to your position as you go along. Okay, so regular investments, investors commit to investing a fixed amount of money at consistent intervals, such as monthly or quarterly or weekly. Depends on you. So dollar cost averaging is simply I'm buying a little bit amount and I'm adding to my position, whether it's going up or down, over a long period of time. Over a long period of time. Okay, so this is just an example. This person is like adding to their position on a monthly basis. Okay, so we'll continue on. When are we to buy? We're to buy more when the prices are low. Okay, with DCA, when the assist price is low, the fixed investment amount buys more units or shares. This is because the fixed amount is able to purchase more units when the prices are lower. So you should be following your stock or your coin. You need to follow it a lot, and you need to know, is this way too low? Is this way too high? You know, I'm following it. It's going to be going up and down all the time. All right, but the question is it exaggerated? If it's exaggerated and it went down a lot, this is an opportunity to maybe buy more, because later on you know it's going to go up, or at least you should know how high you think it's going to go. So you're determining how much you want to buy, whether it's going up or it's going down. When it's going up, you shouldn't be buying a lot. This is what it's telling you. You should be buying more when it's going down. So it's just talking about dollar cost averaging. What is your strategy as we go along? Okay. So let's go ahead and go to the next screen, and let's take a look at screen number 3. All right. Dollar cost averaging. So we're looking at the scale right here, and we're buying basically small amounts of money on a weekly basis. Okay, so we're buying right here weekly or monthly small amounts, and people panic. They get panicked about, oh, it's going up, it's going up, it's going down. I don't know, when should I get in? When should I buy? And the bottom line is that when you're dollar cost averaging, you're not panicking because you're not putting a lot of money. Maybe you're putting like $100 a month, maybe $100 a week. But the point here is that as it fluctuates, it's going to take the average amount of price, okay? So it's going to get the average amount of what you bought on a weekly basis or on a monthly basis. And really for me, it's got to be weekly or monthly. I don't think you should be doing things quarterly when you're dollar cost averaging. You know, we're in it. We're putting small investments amounts, and we're just adding to our position. Why? Because when it runs, you want larger gains. So you're always making the pot bigger. All right. That way, maybe you get some humongous gains. Not to say that you won't take losses or you can't lose the position and lose everything that you're putting in. So you should be aware of which way you think it's going to go. That's the bottom line in 1 year, in the long run. Okay. So this is a long-term investment strategy. All right. Let's go to the next chart right here, chart number 4. All right. So we're reading right here, buy fewer when the prices are high, a reduced market risk timing. DCA reduces the need for investors to accurately time the market to make profitable trades. Since investments are made regularly, regardless of short-term market fluctuations, the strategy aims to minimize the impact of market volatility overall. What does that mean? That means low risk, because basically, you're not really risking a lot. It's kind of like this. It's going up and down in increments, and you're getting the average of that. And so you're not waiting. Oh my God! Well, let's just wait till it drops, and maybe it never drops. Or you're not waiting when it's way up there. You're adding a little to the pot. So you don't know in terms of, is it going to continue to go up? Is it going to continue to go down? Some people just hold on to their money and they never invest it. And then next thing you know, that thing's way in the heck up there. And they're like, man, why didn't I get in $30 ago or $100 ago? Why? Because they weren't dollar cost averaging. They were waiting to get in the game, and it could be too late, So we're sitting here and we're looking at this, and it says here, what is dollar cost averaging? What does it say? I put $5 in 1 month, $5 in 2 months, $5 in 3 months, $5 in 4, $5 in 5, $5 in 6. All right. What do I have? I have an average amount because it's fluctuating. So just because it's $5 I'm putting in, the value may have gone up and may have gone down. It's an average, okay? So 5 times 6 is 30. Is it 30 even? Obviously not, because the value of the price is fluctuating. It could be worth more or it could be worth less. So we're sitting here, we're looking at this increments here, and let's go ahead and go to slide number 5. All right, and dollar cost average amount, my friend. All right, so here we look at the dollar cost average amount. Once again, DCA, dollar cost averaging. For all you new traders out there, 2024, this class is definitely for you guys. All right, so we get over here, we look at the monthly amount. This is a good example. I kind of like this one. They're putting in $400 every month, $400. They added in $2,000. The value can change. So this is the value. So the value is $10. The value is $8. The value is $5. The value is $8. The value is $10. What is the average? 7.69. Remember, the value is fluctuating as you add in the same amount of money on a monthly basis. But the range leads you to the middle. So it's in the middle. So it's a middle range. As long as you're okay with like a middle range, whether it's going too high and then too low, you're in the middle. You're in a good position. So this is a long-term dollar cost averaging strategy. And I'm basically trying to make the pot bigger so that when the bull market kicks in, I let it ride and I make a lot of money. That is the bottom line, guys. All right. So let's go ahead and go to the number 6. And here we go. Number 6, dollar cost averaging. All right. So discipline and consistency, dollar cost averaging encourages discipline and consistency in investing. Investors stick to a predetermined investment plan, which can be especially beneficial in times of market and uncertainty. What is this? It's a long-term investment. Often, by consistently investing over time, investors may benefit from the overall growth of the market. Okay, so dollar cost averaging, for example, in Bitcoin, you can't go wrong. You're going to be here for 8 years or whatever. Honestly, I think it is going to go to 1 million. So people just adding to their position who don't have a lot of money, Bitcoin would be a good investment. Once again, I'm not saying to buy it, but I'm explaining that certain crypto will probably be around for a long time, and Ethereum and the ones that are really being looked at, especially for an ETF already approved, there you go. Am I in Bitcoin? No, I'm not. I told you guys I'm in Illuvium right now. Will I invest in other cryptos? Yes. Have I invested in other cryptos? Yes. Will I be trading probably more during the bull market? You better believe it. What am I doing right now? I am dollar cost averaging. All right. I'm adding to my position. I'm buying before the bull market run starts. I'm not buying the hype because I've already been through a cycle in the Bitcoin, and I know this thing hasn't even started yet. So this is the time to have a long-term strategy. Get in, get ready. All right. For those of you who didn't know, if you hold for a year, you may pay less taxes. Okay. Not saying that is the correct strategy, but I'm just letting you know, if we're making the pot bigger and we're adding to our position, it's only going to grow when the bull market hits and things are going to get big. All right. So don't be panic selling. Don't buy the Grayscale came in and, bought up sold all their Bitcoin. Oh my God, it's the end. They're shaking the tree, guys. They're seeing which one of you is weak and just immediately sells for whatever news you see. You better have some, you better have some conviction about what you're investing in. That's the bottom line. And you better know your ins and outs of what in the world you're investing in. But dollar cost averaging works in stocks. It works in crypto. Is it a guarantee? No. Is it a good strategy for trading? You better believe it. I'm using it and I'm sharing this information with you. This is Gideon 300. You guys have a good one, and thank you for being with me on the program today.